James Politi from the Financial Times. You didn't firm up your guidance on interest rates at this meeting. And given the risks that you just outlined, under what circumstances would you strengthen the Fed's commitment to keep rates at the lower bound? And is there any danger to delaying that pledge? And on the credit facilities, what kind of demand are you expecting for the programs that were set up under the CARES Act? And are you expecting them to rapidly reach capacity like the PPP plan did?
Okay, so on the first, as I mentioned, we moved very quickly, very aggressively. We were the first to return to the effective lower bound where we are now. We got there essentially right away, and we think that's the right place to be. We think if you look at surveys, you look at market pricing, the market expects us to be there for a good while, and that's appropriate. So, it's not as though the market is pricing in a near-term liftoff or anything like that. And let me just say, we're not be in any hurry to withdraw these measures or to lift off. We're going to wait until we're quite confident that the economy is well on the road to recovery. So we see our current stance and our current guidance, and I would say the same thing about asset purchases. We see them as appropriate. I've also mentioned now a couple times that we have done a lot of thinking about what monetary policy might look like over coming months, and that would depend on where we are in a range of potential economic scenarios. So we were thinking about that all the time, but right now, for now, we think our current stance is appropriate. So we made no change in it today.